Welcome back to the video. Today I will share 5 stocks I believe providing the best buying opportunity in June 2025. The first stock in the list, Hims and Hers Health. Hims just announced that they are acquiring European telehealth platform Zava. This deal will allow Hims to grow the customers base by roughly 50%, and they will scale to Ireland, France and Germany at the same time, as the international opportunity for Hims is just starting. The deal is set to close by mid-year 2025 and financials are not being disclosed as for now. There was another news that Hims and Hers is laying off about 4% of employees, and I see the two reasons for this news. The first one is that Hims and Hers does not need as much marketing people for their weight loss drugs after the FDA shortage is finished. And another reason I believe Hims is introducing AI in different levels of a company, improving the efficiency, and they don't need as much employees as before. Anyway, 4% of workforce is not so much as for the company, but I feel pity for people who lost the job. The decision is set to affect about 68 people in the company. And currently Hims has around 1.6 thousand employees globally. In the beginning of May, Hims did the offering for 870 convertible senior notes, and this was increased from initial 450 million. It is 0% convertible notes due in 2030. I believe this is a bullish for the company. They will have capital to scale internationally, do acquisitions, and also enter different markets. And from the perspective of the dilution, I'm not really worried about that, because if we look at the history of Hims and Hers, actually the company is diluting shareholders quite significantly. We can see in 2018, the company had 67 million shares outstanding, and currently in the latest 12 months, we see 223 million shares. So this is huge growth in the diluted shares outstanding. But it's not enough to just looking at the amount of shares outstanding. You also need to pay attention at revenue per share to see how Hims is using this capital they raised during the dilution. So in 2018, they just did 4 cents per share revenue per share. Fast forward to today, they are making north of $8 per share. So this is significant growth in revenue per share. So I believe this dilution is totally makes sense, and I'm totally happy shareholder when the Hims is diluting shareholders and raising capital to continue growing. Recently, Hims just confirmed their long-term financial objectives of generating at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA in a year of 2030. They believe they can achieve this level of growth due to strategic growth drivers like expanded personalization, specialty launches, and global scaling. I believe Hims is significantly undervalued even after the recent run. Currently, you see I'm comparing Hims, CrowdStrike, and Palantir, and I know these companies are operating in different industries, and of course it's not really relevant to compare like this, but just watch this. Currently, CrowdStrike is trading at 23 price to sales, Palantir is trading at 72 price to sales, and Hims is trading at 5 price to sales. Meanwhile, the revenue 5-year CAGR for Hims is 80%, and for Palantir is just 30%, and for CrowdStrike is just 50%. So Hims was growing revenue more rapidly than CrowdStrike and Palantir, significantly more rapidly. Meanwhile, it's trading significantly cheaper than the rivals. And for the forward 3-year CAGR, for Hims we still have 32, for CrowdStrike 22, and for Palantir 32. So Hims will be still growing more rapidly than competitors. Meanwhile, it's trading like 5 to 20 times cheaper comparing to competitors. And for the profitability, I would not pay too much attention because all of these companies are actually not optimized for profits. So at this stage of the company, I will pay more attention at price to sales. Meanwhile, of course, need to make sure that the company is on the right path to profitability. Looking at valuation here, currently projecting 23% growth for the next 5 years, with net income margin scaling from 5% to around 15%, and price to earnings of 36 in the year of 2029, with assumption of Hims not paying dividends and Hims not doing buybacks, but also not diluting shareholders. I have upside potential for Hims of around 136% from here, or almost 19% over the next 5 years CAGR. If you want to double your money with Hims, you need to buy Hims at around $66 per share. Meanwhile, the price as I'm recording this video is a 56.33. So even buying Hims today, I believe you will have market beating returns, and my projected price for 2029 is $133 per share. The next company list is Alphabet, ticker symbol GOOG and GOOGL. The difference between these two ticker symbols is GOOGL has voting rights, comparing to GOOG doesn't. As you might know, the Google is trading the cheapest among Max 7, and the reason of this undervaluation is because they are currently investigated by Department of Justice on their deal with Apple, where Google is paying $20 billion per year for Apple to be a default search engine in Safari. And currently the judge waits on actually, yeah, the Google was kind of a monopoly for the long time, but right now with the AI, with the Perplexity, with ChatGPT, with all these different LLMs, chatbots, and different kind of search engines coming from different competitors, actually Google is losing their monopoly very rapidly. Google search market share just dropped under 90% in recent months. So they're kind of, okay, Google was a monopoly, but currently this maybe is not the case, and in the future this will not be the case even more, which is very bullish for Google because we can expect less devastating outcomes from judge, as for example, they will force Google to sell Google Chrome, which I believe will be devastating for the company because Google Chrome standalone will not worth too much money, so shareholders will not be able to get so much return on investment from this sale. But I believe that Google Chrome inside Google ecosystem is a very important part. On 5th of June, Google introduces upgraded preview of Google Gemini 2.5 Pro, and this model has improved capabilities for coding, especially building, compiling interactive web apps. As someone who is coming from software engineering background, I watched Google I/O entirely and I was blown away of amount of innovation Google is delivering. Another good news for Google: in the end of May, Google starts direct online sales in India of Pixel smartphones. India is one of the largest markets, and this is a huge opportunity for Google to take a market share in terms of the devices and later cross-sell them with their Gemini, with other subscription products and stuff like that. Looking at valuation for Google stock, projecting 10% revenue growth over the next 5 years with a net income margin of around 30% and PE multiple of 20, which I believe is very conservative for such high quality company as Google, with dividend yield of 0.41 and buybacks of 2.5. And again, if Alphabet stock will drop more, Google will increase the amount of buybacks, so this 2.5% could go to 3%, 4%, even 5% if they believe the shares is significantly undervalued. Having said that, the upside potential for Google is around 100% over the next 5 years or 15% CAGR. If you want to double your money, you need to buy Google at current price at $173 per share. Meanwhile, Google is trading a little bit more rich at $175 per share, and my projecting for the price for Google stock in the year of 2029 is $347 per share. The third company in the list, Nvidia, ticker symbol NVDA. Generative AI revenue will skyrocket by 2028. Revenue from Gen AI could reach about 1.1 trillion in 2028, a jump from just 45 billion in 2024. As mainstream adoption accelerates, Gen AI is expected to start generating profits in 2025 with an estimated margin of 38%. This is very high margin for these revenues. That's why the hyperscalers keep pouring money into these opportunities. Gen AI semiconductor spending forecast to reach 280 billion in 2028, and most of this revenue will be coming to Nvidia, as Nvidia currently is holding kind of monopolistic position in this market. Growth of hyperscale data center is exploding after the release of ChatGPT in 2022. The capacity added just keep growing up to the right. Nvidia CEO Jensen Huang believes that data center buildouts will reach 1 trillion by 2028, earlier than his previous forecast of 2030. I believe that we are somewhere here between generative AI and agentic AI. As I mentioned, I am from software engineering background, and at my work, I'm already using a lot of coding assistants. We are using AI for customer service and stuff. And as a content creator, I'm also using a lot of AI for YouTube. Looking at valuation for Nvidia, projecting the revenue growth of 20%, decelerating to 15% in 2028-2029, because no company can grow forever at this kind of level of growth, with a net income of 50% and price to earnings multiple of 35. I believe this is a deserved multiple for Nvidia. Here is actually a mistake because Nvidia is paying dividend, but this dividend is so small that it's actually not significant. With the buybacks of 1%, I see an upside potential for Nvidia of 115% over the next 5 years or 16% CAGR. If you want to double your money with Nvidia, you need to buy the shares at $153 per share, and meanwhile, the shares are trading at $141 per share. I believe Nvidia will worth north of $305 per share in the year of 2029. The fourth company in the list is Mercadolibre, ticker symbol MELI. There was a news that Mercadolibre is lowering free shipping minimum for orders in Brazil from $14.15 to $3.40, which is kind of bearish because this shows that competition is heating up in Latin America and Amazon is trying to take market share from Mercadolibre, so MELI should give more incentives to the customers to keep the market share. Meanwhile, the CEO Marcos Galperin will transition to executive chairman on January 2026, and current commerce president Ariel, sorry I cannot pronounce this last name, will be named as upcoming CEO and president. He joined Mercadolibre in 2017, and before he already was vice president of strategy and corporate development, vice president of Mercadolibre Envios, senior vice president and head of Mercadolibre Envios, and executive vice president and commerce. So I believe the new CEO has enough experience in the company, and I do not see this as a significant bear case for Mercadolibre. But of course, need to pay attention how the strategy of the company will change with the new leadership. The latest earnings report was absolutely outstanding. The beat on the top and bottom line. The shares of the company rose almost 9% after the report. The growth was 66% in Q1 2025, with Brazil grew 41%, Mexico 51%, Argentina whopping 184%. Gross merchandise volume on the platform grows 17% year over year, with total volume was up 43% year over year. Absolutely outstanding report from Mercadolibre as always. Looking at the valuation for Mercadolibre, with revenue growth of 24, 22 and 20% in 2028-2029, with net income margin of around 13% and PE multiple of 35, with no dividends and minimum buybacks expected, I believe Mercadolibre could provide 103% return over the next 5 years or 15% CAGR. If you want to double your money with Mercadolibre, you need to buy shares at the $2,500 per share. Currently, the Mercadolibre is trading at $2,482 per share, and I believe the price in 2029 will be $5,040 per share. The last fifth company in the list is Amazon, ticker symbol AMZN. One of the most bullish news about Amazon I've read last week is Amazon tests humanoid robots for package delivery in San Francisco. I am very bullish on Amazon and robotics, and I believe robotics will improve margins significantly for retail business. And meanwhile, Wall Street is focusing 100% on AWS. Meanwhile, I believe that retail is actually the hidden diamond in Amazon business, and the robotics and cost optimization will give huge improvement to the margins, and Wall Street is not really discounting that. The plan involves equipping these robots with Riven electric delivery vans, which will transport the robots to their destinations. Once at the destination, the robots will handle the final leg of the delivery process, potentially transforming the logistics industry. Meanwhile, AWS continued to boom. Amazon's $10 billion investment in North Carolina underscore our commitment to driving innovation and advancing the future of cloud computing and AI technologies. Amazon keep investing a lot of money in AWS because they see the significant opportunity. So Andy Jassy is seeing AI as a once in a lifetime opportunity. Meanwhile, Anthropic revenue hits $3 billion on annual basis. As you know, Amazon is one of the largest shareholder in Anthropic, and currently Anthropic is already printing $3 billion over the last 12 months, just 5 months after it hit $1 billion on an annualized basis. The metric reached $2 billion at the end of March and hit $3 billion this month in the end of May. One of the sources added. So this is ridiculously rapid growth, which is very good for the investor, which is Amazon, one of the largest investors in Anthropic. Amazon is forming a new group to focus on breakthrough consumer products. And Amazon is always like this. They will never stop. They will keep reinvesting into the business. Amazon is already more than 25 years old company, but they will keep reinvesting the profits. They already generating north of 500 billion in revenue per year, but they keep reinvesting into the business. And when Amazon starts to focus on the profitability, this will be ridiculous levels of free cash flow, ridiculous levels of buybacks, and ridiculous levels of dividends from the company. Looking at the valuation here, modeling the revenue growth of 9% over the next 5 years, with operating free cash flow margin improving from 18% to 22%. And as I mentioned, most of this is because of the robotics, logistics optimization, and cutting costs. With the price to operating cash flow of 22, which I believe is actually cheap for the company because they are not even started focusing on the profitability, with no dividends and no buybacks, but again, no dilution. I believe that Amazon has upside potential of 93, almost 94% over the next 5 years, or 14% CAGR. I believe to double your money in Amazon, you need to buy Amazon at $207 per share, and currently Amazon is trading at $213 per share, and I believe the price for Amazon in the year of 2029 will be $414 per share. Now the question why these 5 companies are the best opportunities in the market in June 2025. If you can see, I have a stock watch list here, and this stock watch list is updated automatically. This watch list is visualizing 5 years return for the companies. In this watch list, I see the best opportunities in the market over the companies I'm following. And currently you can see these top 5 companies I believe is the best opportunities to buy in June 2025. This watch list is updated automatically because it's connected to Google Finance API, and you can see the returns for 5 years for the company. You can see the return CAGR every single year. I assign different kind of level of risk for different companies, and also I believe that this company is good to buy at current prices, but with these prices it will be technically better opportunities to buy and provide a better return. If you believe this watchlist is useful, you can find the link in a pinned comment and description down below. In my public YouTube portfolio, I have Amazon, Nvidia, Google, and also Hims and Hers Health. I don't have MELI in my YouTube portfolio, but I have MELI in my private portfolio. I will be looking for the better price entry for MELI for the YouTube portfolio as well. The performance for YouTube public portfolio is almost 19% year to date, which I cannot complain. Very, very nice. I will continue doing my best to try to beat the market, and also I will try to double this portfolio, and let's see how long time do I need to double this portfolio. I put 10K here, so let's see when this portfolio will reach $20,000. If you want more real-time information when I'm buying, what I'm buying, research, and the best investing community in the world, consider joining Discord channel. Thank you so much, my friend, for stopping by. I appreciate your time watching until the very end of the video. That's all for now. I will see you in the next one.